Welcome back to the Deep Dive. It is Friday, January 30, 2026.
Hello.
If you own a house, have a retirement account, or really just buy groceries, you might want to pull over for this one. Because
Yeah.
if your phone is anything like mine, it has been absolutely blown up for the last few hours.
It is definitely one of those afternoons where the timeline, it just shifts. We're not just looking at a headline here.
No.
We're looking at a tectonic shift in the financial bedrock.
Absolutely. We have breaking news that is shaking up Washington and sending some, well, very confusing signals through the global markets. President Donald Trump has officially nominated Kevin Warsh to replace Jerome Powell as the next chair of the Federal Reserve.
This is the big one. We've been speculating about this literally since the election.
Lux.
So much public criticism of Powell, so much market volatility, and frankly, a lot of drama. But this nomination, this isn't just a personnel swap.
Not at all.
This is effectively decoding the money signal for the next 4 years.
And that is exactly our mission today. We're going to cut through all that noise.
We have to.
We're not just reading the breaking news banner.
Okay.
We're digging into a stack of fresh analysis to figure out what this really means for your wallet.
And we've got a good mix of sources.
We do. We've got coverage from the Jerusalem Post, Kiplinger, PBS, the National News, and CBS Money Watch.
It's a really solid mix, which is vital because the story is so fragmented. You've got the political angle, the Wall Street angle, the economic theory angle.
And they don't all say the same thing.
Not even close.
So here's the game plan. We're going to answer 3 specific questions to help you make sense of all this. 1, who is Kevin Warsh, really?
Right.
Is he the savior the economy needs, or is he, just a political appointee?
2, does his philosophy actually align with President Trump? Because on paper, there seems to be this massive conflict brewing that nobody is really talking about yet.
And the third one, this is the plot twist, can he actually get the job?
Yeah.
Because looking at the reporting from PBS, there are some huge political hurdles.
And even a Republican blockade.
A Republican blockade standing between him and the most powerful economic seat in the world.
Okay, let's get into it.
Let's dive in. The announcement dropped on Truth Social today, and the president, well, he didn't exactly play it cool.
No, subtlety has never been the brand, has it? Trump called Warsh central casting.
Central casting, which is usually Trump speak for he looks good in a suit, right?
Right.
It feels a bit like he's casting a movie, not a central bank.
It does, and that's a fair critique, usually. But here's the thing, and this is a great point from the Kiplinger piece. Usually when Trump says central casting, he just means the aesthetic.
The look.
The look. But in Warsh's case, he actually has the resume to back up the image. He isn't a newbie.
Right, I was reading through his bio, and he's not an outsider at all. In fact, wasn't he the youngest governor in history when he was appointed?
That's right. George W. Bush appointed him to the Fed Board of Governors back in 2006. He was only 35 years old.
30.
Think about that. 35 years old, sitting at that mahogany table, deciding the cost of money for the entire planet.
I was barely deciding what to have for lunch at 35.
Exactly. But the key takeaway here isn't his age, it's his timing. He served from 2006 to 2011.
So he was there when the house caught fire.
He was holding the hose. He was right in the thick of the 2008 global financial crisis.
And he wasn't just a backbencher.
No, not at all. He was considered Ben Bernanke's right-hand man.
Yeah.
Because he came from Wall Street, he was the primary liaison to the big banks during the meltdown.
So he was the guy on the phone with CEOs while the markets were crashing?
That was him. He knows how the plumbing works when the pipes burst. That institutional memory is a huge asset. He isn't learning on the job.
Which gives the markets a certain level of comfort.
It does. But there's another layer to this insider status that the Jerusalem Post highlighted. He isn't just a government guy.
No.
He's got one foot in policy and one foot very, very firmly in the elite billionaire class.
Definitely. He straddles that line perfectly. He came from mergers and acquisitions at Morgan Stanley.
Right, and currently he's a fellow at the Hoover Institution at Stanford, so he has the academic credentials, but he also manages the nest egg for billionaire investor Stanley Druckenmiller.
And just to add to the elite bingo card, he's married to Jane Lauder.
As in the Estee Lauder Cosmetics fortune.
Correct.
So let's look at the profile. Billionaire by marriage, manages money for billionaires, worked at the Fed during the biggest crash since the Depression.
So the key insight here is that markets see him as known quantity.
Exactly. He isn't a wild card. He speaks the language of high finance. In a time of chaos, Wall Street loves a guy they have on speed dial.
Okay, so he's the safe pair of hands. He's the insider. But this is where I get confused, and I think the CBS Money Wash report was really helpful here in decoding this contradiction. Warsh has a reputation as a hawk.
A massive hawk, historically at least.
And for anyone who might not speak central bank jargon, a hawk is the bad cop, right?
That's a good way to put it.
The guy who wants high interest rates to kill inflation, even if it hurts the economy.
Precisely. A hawk prioritizes price stability over growth. A dove is the opposite.
Right.
And Warsh has spent most of his career warning about the dangers of easy money.
But President Trump wants a party. He wants to juice the economy. He's been screaming for rate cuts. He wants rates down to 1%.
He wants the rocket fuel.
Exactly. So why on earth would Trump hire a guy who is famous for wanting the opposite? Is this a mistake? Or has Warsh changed his tune?
This is the trillion-dollar question, and this is where we have to get a little technical because the answer is fascinating.
Let's do it.
If you look at the record, Warsh criticized the Fed after 2008 for keeping rates too low. He hated the easy money.
Hated it.
But if you read his recent op-eds and speeches, he has performed a very elegant pivot.
A pivot or a flip-flop to get the job.
You could call it either. But there is a nuanced economic theory behind it. He is now advocating for lower interest rates, which makes Trump happy, but with a major, major catch.
Which is?
He wants a smaller Fed balance sheet.
Okay, let's stop and unpack that. Smaller balance sheet. That sounds like boring accounting, but I have a feeling is actually the most important part of this whole deep dive.
It is absolutely critical.
What does that actually mean for the average person?
Think of the Fed having two main levers to control the economy. Lever one is the interest rate.
The cost of borrowing money, the gas pedal.
Exactly. Lower rates mean cheaper mortgages, cheaper business loans. Trump loves lever one.
Okay, so lever one is the price of money. What's lever two?
Lever two is the balance sheet. This is the quantity of money. It's the Fed printing new digital money to buy bonds and inject cash directly into the system.
So the balance sheet is the money printer.
Correct. And it's often called quantitative easing or just liquidity.
Got it.
Now, here is Warsh's proposal. He's suggesting a trade-off. He effectively says, I will pull lever one down, I will cut interest rates, but in exchange, I am going to pull lever two back.
So I'm going to turn off the money printer.
Exactly. And not just turn it off, but actually start draining that excess cash out of the system.
So low rates, but less cash sloshing around.
Precisely. It's a low-rate, low-liquidity environment. His argument, and it's a smart if risky one, is that you can stimulate growth with low rates without causing inflation if you stop artificially propping up asset markets with printed money.
It feels tricky. It feels like walking a tightrope. Usually when rates are low, the stock market goes crazy because money is free and plentiful.
Right.
But Warsh is saying, I'll make it cheap, but I won't make it plentiful.
You nailed it. And the markets are right now trying to figure out what that world looks like. If you take away the liquidity, the printed money stocks might actually struggle, even if rates are low.
Which explains why he has been so critical of Jerome Powell. I was reading some of his quotes in the national news, and he did not hold back.
No, he was brutal. He called for regime change at the central bank.
Regime change?
He claimed the Fed is broken and stuck with models from 1978.
Models from 1978. That is a sick burn in economist terms.
It is.
That's like telling a tech CEO they're still using a fax machine.
It implies they're dinosaurs. And he also criticizes the Fed for wandering outside its lane, getting distracted by things like climate change and diversity initiatives.
He argues those are political issues for Congress.
Right. Not monetary issues for a bank. He wants to get back to basics, sound money.
So he's a back-to-basics guy. That aligns with the administration's rhetoric. But speaking of the current guy, Jerome Powell, we can't talk about Warsh without talking about the exit of Powell. The relationship between Trump and Powell has been toxic.
Toxic is putting it mildly. Trump has nicknamed him Too Late Powell.
Because he thinks Powell waited too long to cut rates.
Yes, but there's a much darker subplot here that we need to mention. It was in the PBS report, and it's honestly wild.
You mean the investigation?
I do. The Justice Department is currently investigating Jerome Powell regarding renovation cost overruns at the Fed headquarters.
Wait, really? The chair of the Federal Reserve, the guy managing a $27 trillion economy, is being investigated for remodeling costs.
It sounds bureaucratic, doesn't it? But Powell claims this is a pretext. He believes it's a way to pressure him to resign or just to humiliate him on his way out.
It sends a message.
A huge one. If you don't do what the administration wants, we will find something to investigate.
And that attacks the independence of the Fed. That's the scary part for investors, right? The big fear.
Precisely. Trump believes the president should have a say in interest rates. He thinks he should be able to call the Fed chair and say, cut rates by 0.5 point, the same way he orders a Diet Coke.
And where does Warsh stand on that? If he gets the job, is he just going to take orders? Because the markets usually hate that.
They do. They want an independent referee. And Warsh is trying to thread a needle here.
How so?
He has said publicly that independent operations on the rate number are essential. So he doesn't think the president should set the rates directly. However, he agrees with Trump that the Fed isn't independent on everything else, meaning the regulatory stuff, the climate stuff.
So he's the compromise. I'll give you the deregulation and the philosophy you want if you let me set the specific numbers.
That seems to be the calculation.
Now, before Warsh got the rose, so to speak, there were other contestants. It was a bit like The Bachelor for economists. CBS Money Watch listed a few.
It really was a reality show. You had Kevin Hassett.
The White House advisor.
Yes.
Super loyal, practically family.
But maybe seen as too political. He lacked the independence to calm the markets.
Then there was the outsider.
Rick Ryder from BlackRock.
Right.
He would have been the first chair without any government or academic experience. A purely market-driven Fed.
A trader's Fed.
Right. And finally, you had Christopher Waller.
The continuity candidate.
Exactly. He's currently on the Fed board. Safe, boring, data-dependent. But he lacks the star power. Trump likes stars.
He likes central casting.
And Waller is more accounting department.
So Warsh is the hybrid. He looks the part, has the resume, but he'll play ball with the White House.
Think so.
Now, let's talk about the scoreboard. The news broke. How did the money vote?
The reaction was swift and violent, and it tells us exactly what the market thinks Warsh is going to do.
Okay.
Upon the news, the dollar rose immediately, but the real story, the scary story, was in commodities. Gold fell almost 5%.
Wow.
And silver crashed 13%.
13% in one day. That is a bloodbath. Why would silver crash just because Warsh got nominated?
It goes back to that balance sheet discussion we had.
Okay.
Gold and silver are hedges against a weak dollar and easy money. They go up when the Fed prints money.
And Warsh wants to stop the printer.
Exactly. The market looked at Warsh and said, oh, this guy is serious about shrinking the money supply. That strengthens the dollar.
And a strong dollar crushes precious metals.
Right. The market is pricing in a world where cash is scarce again. They believe the liquidity lever is being turned off.
So the easy money party might be over, even if rates come down. That is a fascinating paradox.
It is.
But here's the plot twist that I found most surprising in the PBS coverage. Warsh getting the nomination is one thing. Actually getting the keys to the building. That's something else.
He has to be confirmed by the Senate, and right now the Senate is a war zone.
Yeah, the Democrats, obviously. Right. Senator Elizabeth Warren came out swinging.
That's expected.
She said Warsh passed the loyalty test and cares more about Wall Street than unemployed Americans. Standard opposition stuff.
Right. If it were just Democrats, Warsh would probably sail through with the Republican majority. But the real problem, the blockade, is coming from inside the House.
You're Republican.
Republican Senator Thom Tillis, he has vowed to block any nominee, including Warsh, until the DOJ investigation into Jerome Powell is resolved.
Let me get this straight. A Republican senator is blocking the president's Republican nominee to protect the current guy from the president's own Justice Department.
It's 4D chess. Tillis calls the investigation political interference or legal intimidation.
So he's holding the confirmation hostage.
He is. He's saying, you don't get your new guy until you stop harassing the old guy.
That is wild. It shows how fractured the party actually is on this issue of independence. So Warsh is stuck in the waiting room.
While the Senate fights a proxy war over Powell's dignity, and every day Warsh isn't confirmed, the uncertainty in the market just grows.
Meanwhile, the economy doesn't stop to wait for Senator Tillis. We just had a Fed meeting this week, didn't we?
We did. On January 28th, they held rates steady at 3.5 to 3.75%.
So if Warsh manages to get past the blockade and gets into the chair, what does he walk into?
He walks into a minefield. He needs to navigate a split committee. Remember, the chair isn't a dictator. He's just one vote out of 12.
So he has to convince all these other THT economists to follow his new strategy.
This new low-rate, low-liquidity strategy. And he has to deliver the lower rates Trump wants without letting inflation spike again.
Which is the thing Warsh has spent his whole career warning about.
His worst nightmare. If he cuts rates and prices jump at the grocery store, his reputation is toast.
but he has one card up his sleeve. And this is the key insight for anyone trying to understand his worldview.
He is a massive, massive optimist on AI.
Artificial intelligence.
Yes. Warsh believes the current Fed models are broken because they don't account for the productivity boom coming from AI. He thinks AI is going to make everything so efficient and cheap that it will naturally kill inflation.
So he thinks we can have lower rates and high growth without inflation because robots will make everything cheaper.
That is the bet. It's a supply-side argument. He thinks the economy can handle more juice because technology is expanding the capacity of the engine.
And he criticizes Powell for not factoring this in.
He does.
That's a bold bet. If he's right, we get a roaring 20s economy, high growth, low inflation. If he's wrong.
We get the 1970s stagflation. Prices go up, but the economy stalls.
So bringing it all together, we have a hybrid candidate. He's got the Wall Street pedigree, the crisis experience, the loyalty to Trump, but a philosophy that's a weird mix of hawk and dove.
He's a complex figure. He wants to do two things that usually don't go together. Lower rates to please the borrowers, but a smaller balance sheet to please the purists.
It reminds me of the advice Jerome Powell gave to his successor recently. He said, simply, stay out of elected politics.
And the irony, of course, is that Warsh's appointment is arguably the most politically charged moment in Fed history. He's walking right into the fire that Powell warned about.
So what's the takeaway for the listener? That if Warsh gets in, what happens to their wallet?
I think the big takeaway is watch the dollar. If Warsh shrinks that balance sheet, cash becomes king again. It might be harder to get a loan even if the rate is lower, simply because banks will have less liquidity.
It's a tightening of the belt disguised as a rate cut.
That's a great way to put it.
That is the experiment we are about to watch. Warsh wants lower rates and a smaller balance sheet. Usually you pick one. Can he actually pull off both? Or will the markets revolt when the easy money tap gets turned off?
We are about to find out.
Thanks for joining us on this deep dive. It's going to be a bumpy few months for the Fed. Keep your eyes on those confirmation hearings. They might be more dramatic than the markets themselves. We'll see you next time.